Whitehead with Whitehead Realty. And today I'm here with Tony Hodge with the Hodge Group. Tony is an insurance agent with Allstate. So today I am going to talk with Tony about homeowners insurance, something that many of my clients often have questions about when they are purchasing a home. And oftentimes when they own a home, they have questions that come up. So Tony, thank you so much for meeting with me today. I appreciate it.
You're welcome. Thanks for having me.
Great. So tell us a little bit about yourself.
Well, I've been an insurance agent or agency owner actually for about 19 years now. I'm an Allstate agent, exclusive agency with Allstate. We specialize in all personal lines of insurance, property and casualty, as well as life and financial services.
Great. Oftentimes when I am working with clients that are buying a home, homeowners insurance seems to be at the back of their mind because they're just trying to get the deal to close. But what I find out is when something comes up, they have questions because they didn't take the time to sit down with someone at that time to learn about what their coverages are and to understand what their policy covers as well. So one of the first questions that I wanted to ask you, what does homeowners insurance cover?
Well, first of all, before I get into that, you bring up a very good point. Most customers get so caught up in all of the things that they have to do to qualify to purchase a home, but they forget about what we feel is probably the most important piece of it is insuring that asset that you're about to purchase.
Right.
Once you go through all of that, it becomes about protecting that, which is what we offer, protection. And in doing that, for homeowners insurance, we protect that dwelling because technically the customer and the mortgage company are the owners of the property. So you have to have dwelling protection coverage to cover it, which covers if there's a major loss, a tornado, hurricane, fire, or something happens to totally destroy the home. It covers family liability, which is coverage that protects the homeowner if someone gets hurt on their property. Coverage that I don't often see used, but a couple things that could happen is if the homeowner's a pool owner and someone drowns, they could be held liable. If they own a pet that bites someone, they could be held liable. Or even if their kid is just bad and beat somebody up on their property, they could be held liable.
Now, with that in mind, is it important that if a homeowner owns a pet, such as a dog, that they let their insurance company know?
Yes, and that's usually part of the vetting process when they're asking you, as they're taking information for your application, if you have any vicious pets.
Okay.
So you need to let them know. If you don't, and later on, subsequent to that, they find out that you did or that you lied, they can dishonor the claim or not pay out the claim. The other coverages is for your personal property, which is your stuff inside of your home, your clothing, jewelry, appliances, all your furnishings and stuff. One coverage under there is what we call scheduled personal property. So on the personal property, you'll have certain limits for each of the different categories of personal property, which a lot of people don't know. So it's not that they'll see a dollar amount that says, well, I have $150,000 for personal property, and they'll assume that covers that they'll get $150,000. Doesn't work that way.
Right. So, for instance, with jewelry, I'm assuming there's a limit to the amount of jewelry under that overall coverage.
Exactly. So if you have an expensive ring, if it's jewelry, average coverage is about $2,000.
Okay.
So if you have a $10,000 wedding ring or whatever, you need to talk to your agent and do what we call schedule it, and you give him a description and proof that you paid that much for it, basically an appraisal, and we can insure it for up to the amount that you wanted.
That's good to know. So if you had, for instance, an additional building on your property, like a detached garage, is that also covered?
That's covered. It's automatically covered under coverage we call other structures.
Okay.
And that's usually coverage amount is 10% of whatever your dwelling replacement cost is. You can increase that if you want. If you've built some more extensive outbuildings or structures on your property.
Okay. Yeah.
So on the coverages, one thing I didn't mention was additional living expenses under the homeowners insurance, which is a key coverage, which covers the family in the event that there's a loss or claim and they can't stay in the home. Your policy covers the cost to house you until you're able to get back into your home.
Okay.
That's a key coverage that most people don't really think about.
Got it. So Tony, does the location of a property weigh on your coverage or premium?
It does, yes. Properties that are in urban areas are usually less expensive to insure. And it has to do with what we call the town rating or the town class, which has to do with the responsiveness of the fire department.
Okay.
Rural areas are a little bit more expensive because it takes a little longer to get a decent fire response.
Now, is that because in rural areas they tend to have more volunteer fire departments instead of manned fire departments?
So they don't have the equipment and
Okay.
the stuff they need to get their response. And then once they're there, the equipment that they would need. And so the time that it would take, you could lose a lot.
Okay. Now, Tony, does a standard homeowners policy covers natural disasters such as floods, earthquake, hurricanes, tornadoes?
It covers most of the things. Well, it does not cover flood and earthquake.
Okay.
It covers hurricanes and any other wind and hail type of disaster. But flood is a separate policy.
Okay.
And earthquakes are separate policies. Now, the risk of earthquakes are smaller, of course, but flood, it's, as we see with the climate change, they're becoming more and more prevalent.
Okay.
That's the right word. But they're separate policies.
Now, quick question too, does it matter, do different states have different coverages that they offer? And I ask that because some people that move from another state may make an automatic assumption that their policy covers something because they moved from, let's say, California, where earthquakes might be more prevalent.
I think it has more to do with the companies than the states.
Okay.
I know there are certain states we don't write in or we don't cover because of the types of losses that they experience there. Florida, we don't do homeowners insurance. Parts of California, I believe.
Okay.
Not quite sure, but I know we're restricted. Even in Alabama and coastal areas, some coastal areas we don't write. So it has more to do with the companies and their rules and what they decide to cover or where they decide to insure.
Okay. Tell me, what is the difference between actual cash value and replacement cost coverage?
Well, actual cash value is basically a stated amount. The customer, a lot of times they will purchase property under market value, and they will say, "Well, I only want to insure it for this amount." When the market value of the property is quite a bit more than what they paid for it, but in their mind, I just want to be, if something happens, I just want to be able to get what I paid
Okay.
back. The replacement cost is the actual cost that we would calculate it would cost to rebuild this property based on today's market and cost of material and the cost to build it,
Okay.
which could be significantly different.
Now, is that why at renewal, your premiums might change? Is that because sometimes the replacement cost of the home changes?
Sometimes, but that usually just has to do with companies taking rate hikes based on overall market conditions and what's
Okay.
going on, or whether if a customer has had a claim, it could be a surcharge from having had a claim. They periodically they'll rerun your credit, and that has to do with your rates.
Okay.
But it doesn't happen often. But about every 5 years, they'll do underwriting review of a policy,
Okay.
and you can experience a rate increase.
So that brings me to my next question. What are some of the components that are factored in to decide on the premium amount?
Believe it or not, credit drive, that's the number one factor. Your credit score. I tell people you pay for bad credit. I could have two customers in there that if I quote them on the same property, it could be a $500 or $600 difference in premium
Okay.
based on those customers' credit scores. With us, we evaluate your driving record. Now, a lot of people ask, what does my driving record have to do with homeowners insurance? Well, it's an indication of the type of overall person you are.
Okay.
Yeah. So if you have several at-fault incidents, speeding and whatever, reckless driving type things, it's going to cost you more.
Okay.
So those two things, the age of the property, of course, the condition of the property, the location, as we talked about earlier, are the biggest drivers.
Understandable. Okay. What steps should homeowners take after a loss to make a smooth transition in the claims process?
Well, prior to the loss, and you don't know when, of course, you don't know when the loss would occur. I would recommend that you document what you have in your home, for your personal properties. Because say if there's a fire or tornado or something that comes through, and once you start the claim process, they're gonna want to know what an itemized list of what you had. Again, you don't just get a check for the amount of coverage you have. You have to show
and prove that you actually had these items.
Correct.
Okay.
So I would recommend that you itemize, you document what you have, whether it's pictures, receipts. I know that's kind of hard, could be difficult, but as best you can, especially your high dollar items, appliances, electronics, those sort of things. After the claim, I don't know that there's much you can do other than stay engaged with your adjuster.
Right.
Keep them informed. Keep receipts of any out-of-pocket expenses that you're experiencing, because they may not be able to get you the money right away. You may have to do it.
Now,
get reimbursed for it.
Does the homeowner have a responsibility to mitigate certain things in a timely manner?
Yeah. If there's a hole in your roof or something that you take whatever steps you need to do to stop the bleeding, as we say.
Okay.
It's just like if you have a water leak or something, and you come home and you see a big mess. Well, don't call us, call the plumber.
Right.
You know, or you try to do whatever you need to do to stop it. And then you do your own investigation, your assessment, and you determine whether or not you want to move forward with the claim or not.
Okay. So there are some reasonable things that the insurance company expects you to do immediately.
Exactly.
To avoid things from getting worse.
Yeah. It's just like if you were in an accident, you take care of yourself and what's going on at that scene. And you notify the insurance company later. You wanna make sure you're doing what you need to do there.
Okay.
I tell people this isn't TV. We don't just magically appear. So you handle the situation.
So you don't just poof and make it all better.
No, don't happen that way. That ain't how I go. Would
you suggest that homeowners get policy reviews on a regular basis?
Yes.
Okay.
Yes. My slogan is, don't think so, know so. And what I mean by that is don't assume or don't think you have certain coverages. Have a once a year, once every other year review with your agent, because things change. Drivers go off your policy. You may need to add a person. You didn't think about it. Your contact information may have changed or needs to be updated. But the big thing is to go over your coverages and what you have. You may have done something additional to your property that could be covered or needs to be, addressed. But you just need to be sure about what your coverages are, what you have. And again, a lot of times you'll find that out, but it's once a claim is in progress.
Right.
Well, I thought I had. No, you didn't. Or you didn't. And I'll use auto insurance for an example. I know we're talking homeowners, but one of the coverages we have on our auto is transportation expense, which covers customers for the cost of a rental if they're in an accident. The cost of a rental while their vehicle's being repaired. Well, some people think that coverage covers them if they need to take their vehicle to the shop.
Right.
Doesn't work that way. Or it's just going to be in maintenance for 3 or 4 days,
Right.
Or they have just liability coverage on it, but because they have it on the other vehicle, I thought I had rental. Well, it's only for that vehicle that you have other underlying coverages. So it's just stuff like that sometimes they don't understand how the coverages work.
Right. So when they're getting a review, not only is it important to remind them of what their coverages are, but to also check in with them to make sure nothing has changed and need to be updated.
Update, yeah. Personal information, contact information, and then coverage information.
Okay. So last question I have for you, what advice would you have for a first-time home buyer when it comes to insurance?
Take your time and understand. Don't let cost be your biggest driver. That's my first advice. Again, they get so caught up, and I've seen this with first-time home buyers, and they're excited, and I understand that. Mm-hmm. I'm happy for them. But their biggest thing is getting qualified. And we got the house, and then it's like, oh, I got to get insurance.
Right.
So a lot of times they'll just take the cheapest, never understanding any of the coverages.
Right.
The deductible, all of the other pieces of it. And believe it or not, a lot of them don't even know who the company is they're insured with. Well, my builder recommended this company or whatever. And they don't even know who they're insured with, how to contact them or anything.
Now, I think it would be important too when they're shopping around to make sure they're comparing apples to apples. And I think that's oftentimes a mistake that people make because they'll get one quote here and one quote there, but they don't sit down and actually
They
compare.
don't compare the
what each-
coverages because they don't know what the coverage
Right.
is. They hadn't asked.
Right.
It's the cost. I gotta have this price to qualify.
Right.
Can't be higher than this. I've seen that situation. And you do what you can, but the priority really should be the coverage.
Yeah, and do you think it's important too to make sure that they go with a standard insurance company?
Yes. Now, and at that state, a lot of them don't know the difference in a standard and a non-standard company, which is, of course, I won't say of course, but standard companies are usually more recognized storefront companies where you have an agent that you can go into versus a non-standard. They're just kind of regional in different spots. They're in non-surplus line type coverages, and they may be a little less expensive, but you don't know what you're getting until
Well, I
something
think
happens.
they lack resources too. If you have a major natural disaster coming to the area, you want to make sure you definitely have a company that has the resources to help you through that.
They're standard, they're proven, and you're right, they have the funding to back their claims.
Okay. Well, I do appreciate you taking the time today to talk with me and answering some questions that many of my clients often have. Where can someone contact you if they had questions about insurance or wanted to get a quote?
Well, of course, Google Tony Hodge, Allstate. We pop up. We're located in the Midtown area in Huntsville. I always tell people if you're walking out of Sam's Club, look up on the hill and you'll see us waving down at you. But we're easy to find. The Hodge Group, Tony Hodge, just Google us. Pop up.
All right, awesome. So I hope that some of our viewers will reach out, if nothing else, to see if they are in good hands and getting the best rate. Thank you.
Thank you.